The new funding for the IRS is set to increase IRS audit rates. It's currently at under 1%. In case you didn't know, an IRS audit can cost you tens of thousands of dollars, not to mention the time, stress, and aggravation. According to the IRS, they say they'll only increase their audit efforts for those earning over $400,000, high income earners, if you will. That's according to the IRS and their new strategic plan. And as you may have heard, they're flush with $60 billion in new funding that was authorized months ago by the Treasury Department. Personally, I have my doubts that they'll only go after high income earners, at least in the near term, and here's why. In short, the IRS is hiring something like 87,000 new employees that you probably heard about, some of whom will be tasked with handling these audits for wealthy taxpayers. But think about this. Do you think someone new with limited experience would be capable of successfully auditing wealthy taxpayers right from the start? No, they need experience. They need to learn the tax laws, they need the experience, the expertise in the whole auditing process. As we all know, you need to learn to walk before you can run, meaning these new IRS agents will need to cut their teeth or get experience with people like you and me. I have anecdotal evidence of this happening right now, and it does make sense. Later in the video, I'll share my top triggers for an IRS audit. Keep watching. By the way, I'm Noel Lorenzana. I'm an Illinois licensed registered CPA. Let's talk about some of the realities as it relates to IRS audits. Here's a chart showing audit rates for different income ranges. This is courtesy of nolo.com. And it looks like they got the information from the IRS data book from 2022. What's interesting is the audit rates for income under $25,000 is 0.4%. This higher audit rate is probably because many of these taxpayers claim the earned income tax credit, and the IRS probably conducts a lot of audits to make sure the credit isn't being claimed incorrectly. Now, looking at those earning between $50,000 and $200,000, the audit rates are at a low 0.1%. From $200,000 to $500,000, the audit rate is 0.2%, and $500,000 to $1 million, the audit rate is 0.4%. So it makes sense that wealthier taxpayers get audited more often because that's where the big money is at. But interestingly, even millionaires are being audited less now. From 2019 to 2022, only 0.4% of taxpayers earning between $1 million and $5 million were audited. That's actually the lowest audit rate for millionaires since the IRS started tracking this in 2004. But wait, with the IRS's new strategic plan, they're promising to increase audits on the wealthy. And don't forget, they've got $60 billion in new funding. According to the IRS, they're going to step up enforcement on high income and high wealth individuals to make sure they're paying their fair share of taxes. The plan also promises not to increase audit rates for small businesses and people making less than $400,000 or less. This is a directive from the Treasury Department. Do you believe them? I mean, I want to, and I really hope they don't increase audit rates for people making under $400,000, but only time will tell. Like I mentioned earlier, some colleagues were seeing an uptick in audits by brand new IRS agents, and it makes sense. They wouldn't be able to start off going after the wealthiest taxpayers. I mean, they've got tax attorneys and CPAs who can help them defend their tax positions. Let me know what you guys think. So, what actually triggers an IRS audit? The IRS uses some pretty advanced computer algorithms to decide which returns to audit. If your return looks a bit off, your chances of being audited can go up. Here are 7 reasons why the IRS might audit you. Number 1, large deductions. If you claim really large deductions compared to your income, that's a big red flag. Like earning $50,000 and claiming $25,000 in deductions, this will definitely get their attention. Number 2, business losses. If your business shows losses, especially repeatedly, the IRS might think you're not reporting all of your income, or they can scrutinize you for having a hobby instead of a legitimate business. Number 3, not reporting all income. The IRS matches what you report with W-2s and 1099s. If there's a mismatch, they'll notice, trust me. Number 4, sloppy returns. Missing schedules, math mistakes, or using round numbers can increase your audit chances. If it looks like you're estimating rather than using actual numbers, that's not good either. 5. Foreign accounts. Having money in foreign banks or financial accounts can raise your audit risk. These may need to be disclosed, so keep that in mind. 6. Digital assets. Owning cryptocurrencies like Bitcoin can increase your audit risk. The IRS asks about this on Form 1040, and they've introduced a brand new form, 1099-DA, which now requires reporting of digital asset transactions. 7. High charitable contributions. If you claim a lot in charitable donations, especially without proper documentation, the IRS will likely take a closer look. If this affects you, consider attaching a copy of the contribution receipt to the tax return. So these are some of the main reasons the IRS might decide to audit you. It's always best to keep thorough records and make sure your return is accurate to avoid any issues. With the IRS planning to hire thousands of new agents, your audit chances may have just gone up. If you need help with an IRS audit, feel free to reach out. I'll help you if I can, or I can connect you with someone else in my network. I hope you found the video helpful. If you did, please give it a like and subscribe if you want to see more content like this one. Thanks for watching, and see you in another video.